Hey everyone, welcome back. In today's video, we're diving deep into the biggest developments shaking up both the stock and crypto markets right now. From shifting monetary policy to renewed volatility in digital assets, there's a lot to unpack. So let's get right into it. Markets have been riding a wave of cautious optimism as we move deeper into the second half of the year. After months of uncertainty, the U.S. stock market is showing signs of renewed strength. Tech stocks remain the driving force, especially as artificial intelligence continues to dominate headlines. Nvidia, Apple, and Microsoft are still leading the charge. Nvidia, in particular, remains in the spotlight following its explosive rise in market cap, thanks to ever-increasing demand for AI chips. Microsoft continues its aggressive AI integration into its cloud and enterprise products, while Apple has been showcasing its own AI-powered features across iOS and macOS, which helped push its shares to new highs. But it's not just tech moving the markets. Investors have been laser-focused on every signal coming from the Federal Reserve. The Fed's recent decision to keep interest rates unchanged was widely expected, but the tone of its commentary hinted at possible cuts later this year. Inflation is cooling, but not fast enough to make the central bank act prematurely. That said, many traders are betting we'll see the first rate cut in September if consumer price growth keeps slowing and the job market softens a bit further. Any shift in monetary policy could set off a major rally across sectors that are sensitive to rates, especially housing, consumer finance, and growth stocks. On the earnings front, most large-cap companies have delivered better than expected results. Corporate profits are holding up, even in the face of tighter financial conditions. What's even more important is the forward guidance. Many CEOs are more upbeat than they were at the beginning of the year, signaling that they expect the economy to remain resilient, even with high borrowing costs. That optimism has helped support stock valuations and keep volatility in check. Switching over to the world of crypto, things have gotten a bit more turbulent again. After a relatively calm spring, Bitcoin recently dipped below the $60,000 mark before bouncing back. Investors are struggling to find direction, torn between positive institutional developments and persistent regulatory pressure. One of the biggest stories is the approval of spot Ethereum ETFs in the United States. This marks a major step toward mainstream adoption of Ethereum and could unlock billions in institutional inflows, just like we saw earlier this year with Bitcoin ETFs. However, that excitement is being balanced out by ongoing investigations by the U.S. Securities and Exchange Commission. Several crypto exchanges and altcoin projects remain under scrutiny, and uncertainty is weighing on investor sentiment. Still, despite regulatory clouds, platforms like Solana and Cardano are gaining traction again. Not just among retail traders, but also among developers building real-world applications. Globally, economic data is sending mixed signals. China's economy continues to underperform expectations, which has dampened demand for commodities and raw materials. Europe is facing persistent inflation pressures, especially in energy and food, forcing the European Central Bank into a tricky position. Meanwhile, geopolitical tensions in several regions, including Ukraine and the Middle East, are driving commodity prices higher and keeping investors cautious. All of this creates a complex backdrop for traders and long-term investors alike. On one hand, the potential for rate cuts, strong tech earnings, and the rapid development of AI could push markets even higher in the coming months. On the other, risks remain, from political instability to inflation flare-ups and unpredictable central bank decisions. The crypto space reflects this same tension: optimism around adoption and utility, but fear of regulatory crackdowns. So, what should investors do in this environment? The key is staying informed and agile. In uncertain markets, diversification matters more than ever. Don't overextend in a single sector or asset class, and always pay attention to macroeconomic signals. Whether you're investing in stocks, crypto, or both, try to look past the short-term noise and stay focused on fundamentals. Momentum can shift quickly, and those who are prepared will have the best chance to capitalize on the opportunities ahead. If you enjoyed this update, give the video a thumbs up and subscribe for more deep dives into the markets, and let me know in the comments. Are you buying the dip waiting on the sidelines, or shifting your portfolio strategy? I'd love to hear what you're seeing out there. Thanks for watching, and I'll catch you in the next one. Stay sharp, stay informed, and take care.